Hey, Kyle here with winthehouseyoulove.com. Today we're talking about FHA loans versus the median US home price. So make sure you watch the first video so you can understand exactly what we're talking about with debt to income ratios here. All right, quick overview of our scenario here. Obviously, we have the median home price is $347,500. We're going to use a 3% rate, minimum down 3.5% on an FHA loan, 1.1% in taxes, 0.35% in insurance, and $500 a month in debt. We'll assume this is like a car payment and a credit card bill as well. Okay, FHA has two debt to income ratios. The front end is 46.99% and the back end is 56.99%. So we'll have to factor both of these in the minimum income that we need. It's 3.5% down, so that's $12,162 as our down payment. So now let's look at these monthly numbers. Principal and interest, $1,438 per month. Now, it's important to note here that FHA charges a 1.75% upfront mortgage insurance premium added into the loan amount. Okay, that's on every single FHA loan. So we're going to be paying for that through the principal and interest payment. It's important that we keep that in mind. Mortgage insurance on FHA loans is 0.85%. So that's a $237 per month mortgage insurance premium cost that we're going to be paying for the life of the loan on FHA. Taxes would be $318 a month, and homeowners insurance would be $101 per month. So the total payment would be $2,094 per month. So now let's do the math and figure out how do we take that monthly mortgage payment number into a minimum income that we would need. So we take this, and what we're going to do is first look at the front end, the housing debt to income ratio. So take the monthly payment divided by 0.4699. That's going to do a little bit of reverse math to find out what our front end income minimum is, and that's $4,456 per month. Okay, so we don't need this right now, but we're going to come back to it. Now let's focus on what is the total monthly debt payment that we have. So again, we have our future mortgage payment, $2,094, plus our monthly debt, which is $500, equals $2,594. This is the total monthly debt payments that we have if we take on this housing payment. Okay, we take this number and now divide it by 0.5699. That's the back end debt to income ratio. That tells us, with a little bit of reverse math here, $4,551 is the back end income minimum that we need. So we have two debt to income ratios that gave us two income numbers. Front end ratio told us we need $4,456 per month. The back end ratio told us we need $4,551 per month. So which one is it? Which one do we need? We have to choose the higher amount, okay? Because if we think about this, for instance, if we just took the $4,456, the lower amount, well, it wouldn't be able to accommodate the back end housing ratio as well. So we need to go with the higher amount here. All right, so we take the higher amount, we multiply it times 12 to turn it into a yearly figure, and that gives us $54,612 is the minimum income that we would need on an FHA loan to be able to qualify for the median US home. All right, so if you want to learn more about FHA loans and see if you can qualify with all the ins and outs, click on this video here to check that out.